The technological tsunami and finance wave. If the financial crises of the past were storms that swept away entire economies, then today's technology is like an approaching tsunami, one that could bring new hope, but also hides measurable danger. The technological revolution in finance is nitrogen monoxide longer a distant prospect. IT is happening every day, every hour, changing how humanity manages, exchanges and invests money. The emergence of blockchain was the first turning point. This is not just a data recording technology, but a promise of a transparent, decentralized financial system, no longer dependent on banks or governments. From blockchain, Bitcoin was born, becoming the world's first cryptocurrency. Initially dismissed as a crazy experiment, Bitcoin later ushered in a new era, forcing central banks and governments to pay attention. Thousands of other cryptocurrencies quickly followed, along with vibrant digital exchanges operating 24/7. Cryptocurrency offers opportunities for many, especially those left out of the traditional banking system. With just a smartphone, anyone can conduct cross-border transactions without cumbersome paperwork or a bank account, but with opportunity comes risk. The crypto market is intensely volatile, sometimes skyrocketing like a rocket, other times plummeting without breaks. As many people become millionaires overnight, just as many lose everything in a matter of hours. Scams, exchange hacks, and a lack of regulation have made cryptocurrency both praised and feared. But financial technology doesn't stop at blockchain. Digital banking is changing how people access financial services. Instead of visiting a physical branch, customers can simply open an app to perform any task. From depositing money and taking out loans to investing, digital wallets and mobile payments have exploded, turning the smartphone into a personal wallet. In many countries, especially in Asia, using cash is becoming a thing of the past. A cup of coffee, a taxi ride, or even a bundle of vegetables at the market can be paid for with a QR code. At the same time, artificial intelligence, AI and big data, are seeping into every corner of the industry. Banks use AI to analyze spending habits, predict customer needs, and even offer investment advice. Automated trading algorithms can process millions of buy and sell orders in the blink of an eye, faster than any human. This makes the market more efficient, but also leaves it vulnerable to manipulation by these invisible machines. A small programming error could trigger a catastrophe for the entire global market. The future of finance is also inseparable from the concept of DeFi, decentralized finance. This is an ecosystem where users can borrow, lend and invest without intermediaries. DeFi opens up a world of financial freedom, where each individual becomes their own bank. However, that freedom also brings chaos, as countless fraudulent projects spring up to steal investors' money. DeFi is therefore both a dream and a nightmare. Another direction is gradually taking shape: central bank digital currencies, CBDCs, and willing to be left behind. Many countries have begun researching and issuing their own digital currencies. China with its digital yuan, Europe with the digital euro, and the US is not standing on the sidelines. CBDCs are expected to help governments better control money flows, combat tax evasion, and fight money laundering. But they also raise concerns about privacy, as every transaction could be closely monitored. So where is the future of global finance headed? Will technology truly bring enlightenment, helping everyone access services more fairly and transparently, or will it become a tool in the hands of a few, creating more stringent control than ever before? The answer remains open. One thing is certain: the technological revolution in finance cannot be stopped. IT is like a high-speed train that has left the station and cannot turn back. Humanity can only choose to grip the steering wheel and guide it down the right path. rather than letting IT plunge into an abyss. And on that train, every one of us is a passenger, directly affected by every decision, every innovation, and every tremor of this new financial world. Finance, the great divider. Balance scale in any discussion about finance. People often speak of growth, prosperity, and limitless opportunities. But hidden beneath this seemingly bright picture is an undeniable truth. The global wealth gap is widening, and finance, instead of being merely a tool for development, is often the very line that divides people into two completely different worlds. On one side, billionaires and giant corporations control capital, banks, and technology. They can move markets with a single investment decision, hide assets in distant tax havens, and use their financial power to influence politics. The wealth of this class is beyond the imagination of most people. A recent report indicated that the wealth of the richest 1% of the world's population is greater than the total wealth of the other 99%. In other words, global economic power is in the hands of a group so small they could all sit together in a large theater. Meanwhile, on the other side, billions of people are still struggling to survive day by day in many countries in Africa, South Asia, or even in the slums in the middle of modern cities. People still lack food, clean water, and access to healthcare and education. They are almost completely excluded from the global financial system. They have nitrogen monoxide bank accounts, cannot access capital for business, and cannot even dream of a small loan. For them, the world of finance is like a locked door, open only to those who already hold the key. The causes of this wealth gap are complex. Part of it comes from the unequal distribution of resources, part from economic policies, and a large part from the structure of global finance itself. While multinational corporations can easily move capital and find low-tax jurisdictions to headquarter themselves, ordinary workers have nitrogen monoxide but to accept low wages and rising living costs, while speculators can earn huge profits from market fluctuations. Ordinary people must bear the consequences of escalating food and fuel prices. This difference becomes even more pronounced during crises during the COVID-19 pandemic, as millions lost their jobs and small businesses closed. The wealth of tech and finance billionaires soared. In just a few months, the world saw many of the rich add tens of billions of dollars to their fortunes, while countless families fell into poverty. The crisis, instead of being a leveler, inadvertently widened the chasm. The wealth gap is not just a moral or social justice issue. It is a threat to global stability. When a small group holds too much wealth, while the majority is left behind, society is prone to instability, conflict, and even riots. History has repeatedly shown that inequality is the spark for revolution and drastic political change. In the modern world, it can lead to protests, anti-globalization movements, and the rise of populism. What is the solution to this problem? Some countries have implemented wealth taxes, welfare policies, and investments in education and healthcare to level the playing field. International organizations are calling for a more transparent financial system, the closure of tax havens, and the encouragement of sustainable and impact investing. But all these efforts are just small steps in a long battle. Financial power is closely intertwined with political power, and changing a system controlled by vested interests is never easy. Nevertheless, there are glimmers of hope. Financial technology, if used correctly, can expand opportunities for the poor. Digital wallet apps, online banking, and microlending have helped millions in developing countries access financial services for the first time. Green and community-focused investing are also emerging as new trends, as a segment of the financial world realizes that wealth cannot be separated from social responsibility. But The road to a more equitable world is still very long. Finance can be a bridge, but right now IT remains a line that divides humanity. And the future will depend on whether humankind chooses to continue building walls or bravely starts building bridges.